the majority of these trades are naked paper contracts, which are distorting the prices. I've been saying forever that these countries, and in particular through the sovereign wealth funds, I talked to a founding member of the CME who says you have no idea how big these sovereign wealth funds are, or like the People's Liberation Army of China, when they are importing gold, or when the sovereign wealth funds are buying gold, these things aren't reported to the IMF in terms of how much gold is actually being accumulated by these countries. But what we can say is that they're bleeding down the exchanges. In my opinion, they know exactly what they're doing. They're coordinated, they're motivated, they're sophisticated, they're wealthy, and for the first time ever, they understand this is how you win the game. You stand for delivery.
In today's news recap, Wall Street bereft of bears, Main Street firmly bullish as geopolitical risk breaks gold out of post-Trump slump. After enduring a 2-week beatdown following Donald Trump's election victory, gold prices saw a strong rebound this week, posting gains in every trading session and gaining nearly $150 by Friday afternoon. Spot gold kicked off the week trading at $2,563 per ounce, and precious metals traders made their intentions known early on, spiking the yellow metal up $10 in the first hour or so of trading and pushing the price to $2,594 per ounce by 8:15 p.m. Sunday evening. Gold continued to test the $2,600 per ounce resistance level throughout the European session, finally breaking through on Monday morning. From there, it was a series of slow and steady climbs punctuated by sharp spikes, higher as a combination of gold supportive data releases and worrying geopolitical headlines pushed the yellow metal upward. The next level of resistance to be breached was $2,625 per ounce, with spot gold breaking through just after Tuesday morning. After a brief pullback following a top just below $2,640, spot gold once again resumed its steady uptrend, hitting the then weekly high of $2,641.42 shortly after. Midnight brought the only significant pullback of the week, with spot gold falling from $2,638 back down to $2,621. But the yellow metal then resumed its multi-day uptrend, and by the North American market open on Wednesday, it was trading above $2,645 per ounce. Economic data then took a back seat to geopolitical news as the ratcheting up of missile strikes and bellicose rhetoric pushed the price steadily higher, with spot gold hitting a high of $2,673 per ounce shortly after Thursday. It then set a fresh weekly high of $2,690 by 10 p.m. and broke decisively through the $2,700 per ounce resistance level around 4:30 a.m. EST Friday morning. Now, before we dive back into the best clips, I've got a deal you cannot afford to ignore. Black Friday's here, and so is your chance to lock in ultimate online security with NordVPN. Listen up. This is especially for you stackers out there. Keep your data safe, stay anonymous, and grab this exclusive offer. 3 extra months free plus a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
The majority of these trades are naked paper contracts, which are distorting the prices. I've been saying forever that these countries, and in particular through the sovereign wealth funds, I talked to a founding member of the CME who says you have no idea how big these sovereign wealth funds are, or like the People's Liberation Army of China, when they are importing gold, or when the sovereign wealth funds are buying gold, these things aren't reported to the IMF in terms of how much gold is actually being accumulated by these countries. But what we can say is that they're bleeding down the exchanges. In my opinion, they know exactly what they're doing. They're coordinated, they're motivated, they're sophisticated, they're wealthy, and for the first time ever, they understand this is how you win the game. You stand for delivery. No one ever did that before. Now they are standing for delivery and doing so in a manner that is beating us at our own stupidity. It's jiu-jitsu, using your opponent's leverage against you. And then at some point, to Rob's point, we will see an establishment, I believe, of an exchange, whether it be the Shanghai exchange, which takes center stage, or the exchange in Dubai, or the Brics exchange, one that will install legitimacy. Just one last point. When you look at the Shanghai Metals Exchange, in order to buy trade a bar on the Shanghai Metals Exchange, you first have to buy that bar from one of the 6 or 7 pre-approved refineries. They are then laser etch a number on that bar attributed directly to one certificate. When you look at the West, which has rehypothecated many times over the gold and silver contracts, similar to what the Hunt brothers realized in 1980, there is no legitimacy. And at some point, I could see the continued draining of the exchanges to the point where you have a force majeure, or a closing of the ability to stand for delivery on COMEX, or something much worse on the LBMA, and how leveraged things are. So yeah, I do believe that will happen as well, Rob. And I think that they're biding their time using the Western price mechanism. They're not bitching about it. They're the ones accumulating it at this point. But at some point, when no one is foolish enough to sell at those prices, that's when I think you begin to see a transition to the Brics exchange, to the Shanghai exchange, to the Moscow exchange, to the Dubai exchange, in a search for legitimacy. Have been looking for a opportunity to square their books, and I've been wondering how the hell they were going to do that in a market that just continued to march higher, and every time they would waste ammunition by hitting it, it would go higher very quickly. And the down days have been very mitigated, very shallow. And so I think this was an opportunity. Look, I mean, part of the exuberance, and I like the irrational exuberance statement, because it is, in the respect, but it's justified on one hand, in that we've all lived through bizarro world for the last 4 years on many levels. And I think people are tired of bizarro world, and they're tired of a country that favors lifestyle over merit and hard work, that favors equality over equal opportunity. And I think we're sick and tired of watching our country and the things that made this country enviable to most of the world, our culture, be whitewashed right out from underneath us. The judicial system, the electoral system, the immigration system, the lawlessness, the wokeness. And it's a breath of fresh air. And I think that has also translated into the risk on trade, where, there's no reason to be defensive anymore. It's hope springs eternal, but that's misguided. And I think that's exactly what the bullion banks were counting on and hoping for, and use that opportunity to indeed flush out, the weak-handed money managers that drop the price down below the levels that trigger selling, and they're covering. But to Craig's point, the debt, that's not going anywhere. In fact, it's obviously will probably get worse in a weaker dollar environment with low rates and a weak dollar. That's hugely inflationary. Inflation is coming. The loss of purchasing power is coming, and really what this translates into, which is somewhat concerning for a lot of the country, is again, like the Cantillon effect. The wealthy will get wealthier as their assets go higher in price, which ultimately will translate into price inflation as that trickles down into the economy. We've seen this playbook over and over and over again, and pivoting away from inflation or fighting inflation when they're 65% away from their target, when Trump is inheriting an economy where the numbers that he supposedly, or the book, the economics that he is inheriting, are far from what we're being told. I mean, inflation is much higher than the 3.5%, and that we're being told. Unemployment is much higher than the numbers that we're being told. The economy is in much worse shape. And so, yeah, I think that, especially with what happened, I guess, to me, the big thing that I'm most concerned about is, we've seen the rates on the 10-year go higher as they've lowered the front end of the market. And again, the banks are loaded on 10-year treasuries. What we saw happen in Lindsay, Oklahoma a few weeks ago, I find to be a kind of a red flag. And the fact that it's gotten virtually no attention whatsoever by the mainstream is absolutely crazy to me. And Powell's talked about bank consolidations. I think the banks are massively over leveraged and undercapitalized, and watching rates on the back end go higher only hurts them more. But when the bank in Lindsay, Oklahoma failed, 50% of the uninsured deposits, they're gone. Boom, vanished. When Silicon Valley Bank failed and Signature Bank, they were all bailed out. Hundreds and hundreds and hundreds of millions of dollars. Oprah's money, Oprah Winfrey's money, the tech startup money, bailed out. This little podunk bank in Lindsay, Oklahoma fails, and only 7 million in uninsured deposits, only 50% are returned. The other 50%, I would argue, is the first bail-in this country's ever experienced since the legislation was written, and there's not a word of it on the mainstream. And I guess if I were going to play devil's advocate in all of this irrational exuberance, and I think some of it's justified, I do. I think it's time to be optimistic for getting our culture back, getting our country back. That's a good place to start. The financial side of things, we're a long way from fixing that. But if I were to throw out one concern, it's that if there really is a deep state, if things really are planned, my biggest concern is they're setting up for a fall. That you look at the BTFP, the Bank Term Funding Program, it's over. You look at the reverse repo market, it's almost down to zero. The liquidity is being yanked from the system right at a time when the banks are massively over leveraged and undercapitalized, and we should expect to see long-term rates continue to move higher. That's an unresolved problem. And so while I am very optimistic, and I think it is very optimistic ultimately in an inflationary world to expect metals to do well at some point after this sell-off commences and or finishes, I just think that it's also justifiable to be cautiously optimistic as to how this all plays out before it's all said and done. Not to be the buzzkill. I'm sick and tired of being the buzzkill. I'd rather be optimistic, and on many levels I am, but I don't think we're out of the weeds yet, not even by a long shot. And I think that people should not lose grip on their precious metals. This is what the commercial banks are counting on, for people to shed their positions in metals and make it easier for them to cover their shorts. But this is the time, I think, to really hang tight on your grip and hold.
In today's news recap, higher supplies to the UK lift Swiss October gold exports. Gold exports from Switzerland rose in October compared to September due to higher supplies to Britain, but were down from a year ago as high gold prices kept deliveries to China and Hong Kong subdued. Swiss customs data showed on Tuesday. Supplies from Switzerland, the world's biggest bullion refining and transit hub, to Britain in October reached the highest level since June 2021, according to the data. London is the world's largest center for over-the-counter trading of gold. This year's 27% gold price rally, which took spot prices to a record high of $2,790.15 per troy ounce on October. 31 has been affecting physical demand in China, the world's top consumer of the metal. However, gold exports from Switzerland to India, the world's second largest gold consumer and a major importer, rose in October from September amid festival purchases. Before we jump back into the clips, check out our exclusive Black Friday VPN deal. A good VPN is essential for keeping your data private and secure. And with this deal, you're getting top-tier protection for just a few bucks. It's fast, reliable, and a no-brainer at this price. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
When Trump spoke, it's interesting, directly following Trump was the senator from Wyoming. And her last name escapes me at the moment. Loomis, I believe. I think it's Senator Loomis from Wyoming, who came up and said that her idea is to revalue the gold held by the Federal Reserve on behalf of the Treasury to a level high enough to purchase Bitcoin with some of the proceeds. You can't make it up as well, in that all of the central bank balance sheets that hold gold have it in an account called the gold revaluation account. It's the name of it. The head of the Dutch National Bank has talked about this for quite some time, revaluing the price of gold. And, when you look at the amount of gold that has been accumulated throughout all of Europe and throughout the Brics nations, it would certainly benefit the central banks. It would behoove all of them. Over my shoulder, you got Roosevelt there. In essence, that's what he did when he confiscated gold in 33. He devalued the dollar by 40%, thereby revaluing the price of gold by 40%. It's something that is being noticed when you see a senator from Wyoming actually say that she wants to float a bill to do that. It is being noticed. You got Jim Rickards saying $27,000 an ounce gold by dividing the gold supposedly held at Fort Knox by M1. You got others that say other things. In a world where Bitcoin can be $100,000, no big deal. Why couldn't gold be revalued to $130,000 and thereby render our $36 trillion debt solvent, offset with the amount of gold that would more or less make that a wash? I guess it could. In theory, the Treasury says any country that wants to deliver their gold to the U.S. Treasury will pay them 130 grand an ounce. Okay. Isn't that what the price is? Yes, it's inflationary. Yes, it's going to have ramifications. But when you realize that we are entering that period of time, Rob alluded to the fact we're insolvent, approaching, what I think we're at 120% or so of debt to GDP. Where I come from, those countries way back when, anything over 100% debt to GDP were considered banana republics. And those were usually the countries that had questions surrounding their electoral process, their judicial system, all of the things that have plagued this country. I mean, you could argue we have been toting the banana republic line for quite some time. And in a world where interest rates are rising higher and fiscal responsibility is not, hasn't shown any signs, as Rob says, show me that you're going to cut spending and I'll believe it. I think this is something they notice, certainly, that this is one option to revalue gold to a level high enough to dramatically pay down their debt. I think the Brics nations would be more than happy with that. And when you talk about whether it be the unit, Project Enbridge, and of course what the BIS did to Project Enbridge is something that I consider to be right out of a James Bond movie. It's more or less espionage at the 12th hour kind of thing. We're going to pull the plug on it. We can talk about that either or not. But I think when you realize that, these countries, whether it be through something like the unit or something that would be traded over Project Agora or Project Cedar, Rob's talked a lot about all of these cross-border payment programs that are issued by the West and by the Brics. I suggest everyone watch that video that you did, Rob. It was very, very, very informational. You went through all of these platforms and what they could potentially offer. But to me, the common thread in all of it is a marriage between blockchain technology and gold and a new system. And to peg a new system that has lost all credibility to something that inspires credibility. Yes, I see it. It's right here on the blockchain. It's audited independently, continuously, and it's pegged to and backed by gold. The only way you make that work, and that it's interesting, the Swiss had a 40% gold backing way back when. That's the number that the Brics nations have said in theory they chose. And I think that is something that would work. You put gold at a much, much higher level. You peg it to gold, put 40% gold backing or whatever it is, still gives you monetary latitude. And then Craig brings in Judy Shelton. I wonder if they will nominate her to one of the governor positions. She won't replace Powell anytime soon unless he steps down, as he has, I think, 2 years left. But she is an advocate for the gold standard, and more relevant to me, everyone talks about de-dollarization. Yeah, that's important, right? I mean, the settlement currency, it's important. But to me, it's more along the lines of where's everyone putting their excess? And it used to go into treasuries. And the lack of demand for treasuries, to me, is the real problem. Who's going to finance our debt? Does it become hyperinflation as the Fed is the lender or the purchaser of last resort, or yield curve control, as Craig has talked about forever? These are all possibilities. What Judy says is, well, hey, look, no one of any intelligence would buy our treasuries of any duration. I think they're uninvestable right now, personally. She didn't say that. I'm saying that anything 10-year duration or higher is uninvestable. You're out of your damn mind to do it. But she says, well, we'll just have it redeemable in gold. Well, that's the first smart thing I've heard come out of a politician's mouth in a very long time. So yeah, that would be very, very, very a very, very smart move, I think, and would rekindle demand for our treasuries. But yes, I personally think, and I've been talking about it for a long time, that they will indeed revalue the price of gold. The central banks will, and it will at that point then be tied in some form or fashion to a new currency system. Now, I don't know how far away that is, but to me, there's the revaluation of gold by the BIS, the massive accumulation. Look at the repatriation of gold. 40 nations have all brought their gold home. Now, the conventional wisdom is that it's because of the weaponization of the treasury market. No one trusts the Bank of England or the New York Fed anymore to safeguard their metal. Look at Venezuela. Can we have our gold back? No, said the Bank of England. No, you can't. But dig deeper into it, and I know that the unit settlement token has been kind of waylaid at this point. We'll see what happens with it. But if you read the white paper on it, it talks about the gold would have been held within the borders of the countries that possess it, would mint their own tokens, and the currency aspect, the 60% currency and the 40% gold, would be held in escrow accounts within the borders of the countries that possess it, and independently and continuously independently audited to protect the integrity of the system. But no central authority, no Bank of England, no New York Fed. It's more along the lines of a cooperative system. Anyways, I don't want to get too far down the rabbit hole, but what I will agree that I do think that is something that they notice. Look, you can inflate, you can default, as Richard Russell always said, either inflate or die. I've talked about finding a villain, Xi Jinping and Putin and OPEC, for dumping the dollar. That may or may not happen. Option 4 is revalue gold to a level that most people think is impossible and peg it to a new system. And yeah, it's an option that I think probably is the least painful.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the Brics nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.